Now on BBC News, the latest from New York and around the world. Business Today.
Live from New York at the opening bell, this is Business Today. A strong start on Wall Street with investors hoping to extend big tech's 7-month winning streak. A fragile truce. The White House confirms Beijing will lift export bans on rare earths and computer chips, driving a rally in auto stocks. And holding pattern. Airports across the US have been hit by widespread delays due to staff shortages from the government shutdown. Welcome to Business Today, live from New York. I'm Michelle Fleury, and we start here on Wall Street, where markets are in the green again after a record-breaking October. Of course, all of that was driven by surging big tech valuations with AI in the driver's seat. Now, today, it's the turn of software maker Palantir reporting earnings after the market close. And away from tech, well, we had further details from the US-China trade truce over the weekend, which looks like good news for the global car industry. It has potentially avoided a chip shortage some feared could shut down production, with some share prices rising accordingly. But with the US government shutdown continuing, how long can all of this positivity last as American households and travellers start to feel the pain? Well, we turn to Jim Warden, Chief Investment Officer at the Wealth Consulting Group. Jim, good to see you. When it comes to the S&P 500, you started this year saying you thought it would get to 6,000. Then you raised that forecast. You think it's going to hit 7,000. I mean, when you see deals like Kimberly-Clark offering, what is it, $40 billion to buy the maker of Band-Aids, Kleenex and Tylenol, do you think it even potentially goes beyond 7,000 for the S&P?
Good to be with you, Michelle. So at the beginning of the year, we said 7,000 for the S&P 500. We've held on to that 7,000 through the March and April lows, and we're still holding strong to that. It very well could pass the 7,000 mark. It's an arbitrary mark that, we kind of put out there for investors that, hey, this is the possibility of what we can do. This is the potential path. Now it could hit a little bit above or a little bit below that, but we still feel comfortable with that price target.
I mean, October was a fantastic month for the markets. A lot of that seems to be driven by the tech sector. I mean, we wake up this morning, you've got Nvidia shares higher because they're suddenly allowed to sell chips to the UAE. You've got Amazon doing a $38 billion deal with OpenAI for Nvidia chips. Do you see this story continuing to drive the markets higher for the rest of this year?
Yes, I do. So technology is one of the areas that we've liked almost the whole time. Certainly all of 2025, we've liked it for all of 2024 and most of 2023. And the reason why we like it is just because the margins are getting better and better, across the board. So we're seeing the margins just for the S&P 500 information technology sector, roughly 28%. And that is almost double what we saw for the same sector prior to the tech bubble. A lot of people like to compare today with the technology bubble of 1999, 2000. We think it's very different. And the reason is because these companies are making a lot of money. The margins are increasing. The margins are the highest that they've ever been. At some point, we will slow down as it relates to capital expenditures, but that's probably a couple years out from now.
Jim Warden, we're going to have to leave it there, but obviously the split screen economy we're seeing at the moment, as you say, with some companies doing extremely well, but more broadly speaking, concerns growing about jobs. Jim, thank you for joining us this Monday.
Thank you.
Well, now to the latest on US-China trade. The White House has published further details of the trade pact agreed last week by President Trump and President Xi. It shows that China will suspend putting into place additional export controls on rare earth metals and will begin easing on an export ban on computer chips that is so vital to the production of cars around the world. However, US Treasury Secretary Scott Bessent called China an unreliable partner in some trade areas, particularly when it comes to rare earths. Here he is speaking on Fox News on Sunday.
We could threaten the tariffs again, and we have plenty of things that we can hold back too. Over the next 12 and 24 months, we're going to be moving at warp speed. We didn't get here in a year. This is a problem that has been with us for several decades. It's never been addressed with these rare earths, the rare earth magnets. The Chinese have cornered the market, and unfortunately, at times, they proved to be unreliable partners.
So Scott Bessent says the Chinese have cornered the rare earths market, but according to this expert from the University of Birmingham, this is a situation that China has been warning about for a long time.
China has been telegraphing for many years now how important it feels the supply chain for rare earths and many other critical metals and minerals are. They've been slowly putting into place new rules and regulations internally about the production and the environmental impact of these materials. And essentially they've been saying, hey, you folks outside of China, there are deposits of these materials in your jurisdictions. Why don't you take the steps now to mine, process, and develop those supply chains? Because historically there have been environmental challenges with these materials. China has certainly been cleaning up in that respect. But ultimately, this is a result of, over the decades, the West basically saying to China, we want lowest cost at any cost. We want to export the environmental impact and import the products. So I think it's a little, I wouldn't agree necessarily that China's been an unreliable partner. This has been telegraphed for a long, long time. And finally, this year, things have come to a head.
As mentioned, one sector paying particular attention to the US-China trade détente is the car industry. Shares in global car makers have been on the rise today on the back of that news over the easing of the computer chip export ban as part of the US-China trade truce. There had been concerns that a lack of chips, in particular from one Chinese-owned company, Nexperia, could create global supply chain issues. These chips are critical for the automotive industry, using them to make things like wing mirrors and airbags function, as this car expert explains.
What's interesting about this, the Nexperia case that you referenced, is that the wafers are actually made in the UK and Europe, but then they're shipped over to China for to be sliced up, processed, packaged, and then globally exported. Now, it's a massive operation. That one firm alone makes 100 billion chips a year, roughly 50% of the supply that the European auto industry consumes. They're not necessarily the most high-tech chips, but they are produced at massive scale at very low cost and are super reliable. The car industry consumes vast quantities of them. So finding an alternative supplier is very difficult indeed. And that's the problem they've got. So China has said it's looking to ease the restrictions, but that's still pretty vague. We don't know what criteria it will apply. And even if it does ease the restrictions, we may still see chip shortages affect car production in Europe going forwards.
Now we look at how the US government shutdown has global implications. Flight delays in the US are affecting airports across the country as the impact of the government shutdown continues to spread. There's been disruption on Sunday for travellers in New York, Texas and Chicago. More than 10,000 air traffic controllers have been working without pay throughout the shutdown, which is now in its second month. But some are choosing to call in sick. Here's the US Transportation Secretary, Sean Duffy.
We work overtime to make sure the system is safe, and we will slow traffic down. You'll see delays. We'll have flights canceled to make sure the system is safe. But we have to be honest, when we have controllers where we have shortages in towers and TRACONs doing two jobs, does it add more risk into the system? Sure it does. But again, we're always managing that. Again, we don't want crashes. We want people to go safely.
Well, what does this all mean for international travellers? Let's bring in Paul Charles, consultant to the travel industry, who is due to fly to the US tomorrow. Paul, good to see you. Look, for travellers who are watching this around the world, what does this US government shutdown actually mean for air travel? You know, are flights still taking off? Who are the people most affected?
Well, certainly flights are still taking off. And in fact, on transatlantic flights, those are being prioritized, for example, from the UK to the US. They're the most lucrative flights in the travel sector. But many flights are being cancelled domestically. So we saw yesterday over 500 flights cancelled domestically in the US, especially going into Newark Airport near New York. And Newark's had a torrid time recently, not just because of its own IT issues, but also because of staffing issues. And that's the nub of this crisis that's affecting some of these flights. Air traffic controllers not being paid and not turning up to work.
I mean, as you say, air traffic controllers getting a bad rep, certainly at Newark Airport, real problem with scheduling even before the shutdown. How much do you think this is actually damaging America's reputation with international travellers?
I think it's the uncertainty that's created that may put off some from travelling. If you're a business traveller, if you're a CEO, especially going to a meeting and you see this uncertainty, then the danger is you think you may be stranded if an airport shuts down or air traffic controllers not turning up means your flight will be delayed or even cancelled. And it's that uncertainty that tends to lead to questions about whether in fact you want to go ahead with a trip or instead do it on video conference. Already, of course, the US has been suffering from Canadians not wishing to travel due to the tariffs dispute, also some European travellers not wishing to go due to apparent and alleged immigration issues on entering at the various borders at the airports. So this is another knock-on that could, in fact, put off some people.
We're almost out of time. Very briefly, what's your top tip, especially for yourself as you're preparing to travel here to the US?
Well, always check whether your flight is likely to be delayed or cancelled, whether it's been cancelled the day before, check its history, check the track record on that particular routing. But if you're going transatlantic, you should be okay. But the longer this goes on, it may, of course, put off some people from choosing to book that flight.
Paul Charles, good luck with your flight tomorrow. Thank you very much for joining us.
Thank you.
Now, in other news, shares in Kenvue, the maker of painkiller Tylenol, as we mentioned earlier, they are soaring on the news that it's to be taken over by Kimberly-Clark in a $48 billion deal. Kenvue has been struggling since September when President Trump claimed, without scientific evidence, that Tylenol causes autism. The cartel of oil-producing nations OPEC Plus has agreed to pause plans to increase production next year amid concerns about a global glut of oil. The group, led by Saudi Arabia and Russia, agreed on Sunday to halt any further rises in oil output from January for 3 months. Oil prices hit a 5-month low in October. And small businesses in the UK are struggling to take advantage of the UK government's new trade deals. That's according to a new survey. A majority of the businesses polled by the British Chambers of Commerce have reported flat or declining exports in the third quarter of this year. Now, they blame post-Brexit red tape and Donald Trump's tariffs. And that's all from us here on Business Today. Goodbye.